Once again, Bitcoin is looking weak and has rejected from the 70,000 area. So this time, should we be thinking about exiting our positions and exiting the market for this cycle? In this video, we're going to take a look at some different analysis on different indexes and things. And by the end of the video, so stay tuned till the end, you should be well placed to make a decision on what you think is going to happen from here. Before I begin the analysis, I'd really appreciate if you could like this video and subscribe to the channel if you haven't already. Also, I'll leave a link in the comment section below for a link to our free Telegram group to receive daily market updates, and also a link to our website as well, where you can find out more information about us. So let's get straight onto it. Looking here at the Bitcoin daily chart, we can see once again we've rejected from the 70,000 area. This has happened a number of times now. Just as everyone starts, I think we're going to push for a new all-time high. We see a strong rejection, trading back down in the mid 60,000 area, so sort of 65, 66,000 at the moment. Now, this also has been, this has seen pretty bearish sentiment across crypto Twitter and socials, or crypto X, I should say now. And a lot of people are turning bearish, but should we really be here? Other coins as well, some major coins, I've looked at this week. Atom, for example, here on the weekly chart, we're literally trading at the bear market lows again. CRV, we're actually at an all-time low. So it's understandable why people are nervous, why people are scared this week. But let's take a look at some higher time frame analysis, and let's make a bit of a better informed decision. Now, this current price action is not actually a surprise to me, and if you are if you've been following my daily market updates, which I said you can access from the link in the comment section, the free Telegram group, we was actually talking about 65,000 when we was at these highs around the 72,000 area. It seemed like it was far away at the time and pretty unbelievable. But just as we saw all of this liquidity here, I saw liquidity developing in this area. And sooner or later, this gets swept. It didn't happen here, and once it started to build here, I really expected it. So we can see from my box that I marked out around right at the sort of 8th of June, 9th of June, so a good 6 or 7 days ago, we've tapped right into that, and that's where the bounces come from. So no surprise that we are here, considering the amount of liquidity. But what is going to happen from now? Well, to give us a bit of more realistic view, let's take a look at the higher time frame. So let's go to the weekly chart. And perhaps you'll think that things don't look so bad here. First of all, we're very clearly just trading in this weekly range. And we have been now, realistically, since the start of March, since we hit the all-time high. So over 3 months of trading in this range, which doesn't mean it's bearish. In fact, if anything, it can be bullish. We saw a very similar thing happen right at the start of the year here. Perhaps not for as long, but we saw this sideways movement, and then we got an explosive move up. So the same thing could just be happening again here. So we sort of have a summer where it is a little bit choppy before the next move up. Now we also have where we are trading right now. We're just retesting this weekly demand zone that we saw when at the start of May. We got a strong move up after retesting the sort of 56,000 area. This is just right now holding the weekly demand. So if anything, that's quite bullish, a strong support there for this to hold. Also, if we look back previously where we are trading right now, this is the highest weekly close of the previous bull market. We accepted back under it during the end of April, start of May, regained it, and this is actually the first real retest we've had of that 2021 highest weekly close. And right now we are holding it. So if we hold above sort of 65,500 at the weekly close, then that's really bullish. We've retested the support. So no reason to be bearish in that situation. Now, looking at other indexes as well, the total 2. So this is the market cap excluding Bitcoin. Very similar thing. We've just sort of been trading in this range, and we are looking like we're going back towards the sort of $1 trillion area, which if we get that $1 trillion down to 980 billion is a really good place, in my opinion, to increase exposure on altcoins. Again, we're just seeing this sort of sideways choppy movement, and nothing to be particularly bearish about here. If we start to lose this and start to accept under 980 billion, then it could be a different story. But for now, whilst ever this range is holding, then we can still be long-term bullish in my opinion. Bitcoin dominance as well. This is the monthly chart we're looking at here, and this is coming to quite a sort of a significant area going back to 2018. It was resistance, support, and we're sort of tapping into that resistance again. What we really want to see for strength on altcoins, we do want to see a stronger rejection from this zone. So far it is rejecting. If this gets flipped, so keep an eye on sort of the 58% area. If we do start to flip that and close above this area in the coming months, then we could obviously push much higher, which would be good for Bitcoin, but altcoins could suffer further. I just think personally this market cycle is just, it's dragged out, so it's just taking long. And if you look at each market cycle, that's kind of the trend. We just had a really long bear market, so we could have a longer than usual bull market as well. For me, I've mentioned, I've looked at this chart a number of times on previous videos, the MV/RV score, and we can see that market tops are generally called when the Z score reaches into the red zone. We are nowhere near that yet. So rather than being bearish on these support levels for Bitcoin that we've spoke about, okay, rather than being bearish, for me, I'm going to be bearish when we're at these highs. When we're here, this is when I will be looking to exit the market. It's been a good indicator pretty much every previous market cycle. So for me, I just have to trust that it will be the same again this time. So just to recap, yeah, for me, there's no reason to be particularly bearish here, especially while this is holding. There is a chance we go low. We could test the bottom of the range, lower 60,000 area. Going back to the daily chart, we do have this this daily demand which has yet to be retested after breakout, and that's sort of 63.5 down to 61,000. So there's still a chance we test that, but all the time this range is holding for me, then I am still long-term bullish. Let me know your thoughts, guys, on the market in the comment section below. Hope you found this video useful, and I will see you on the next one.